those two things are big issues, right? The devaluation of your money and your savings, and the fact that you don't actually own anything. So we go back to the Russia situation, doesn't own any of those dollars. So Bitcoin comes along, that becomes very, very interesting for solving what we are now seeing writ large. And Ethereum comes along, and you've got this contractual terms and this kind of something you can build the applications layer. So they start building the DeFi world, which is decentralized finance, because you don't want the banks involved. Yes, because that's a problem, because the banks are too interlinked with the leverage in the system, and so then that doesn't function in the way it should do. Monetary policy doesn't work, hence why central bank digital currencies are coming. And I know people hate it, but I don't care. It's happening, and they are going to use it for direct transfer payments. And yes, you will have a different rate of interest for different people because they want to penalize some people versus others, and people are going to hate it. It's actually more effective than what we've got now, which is really blunt tools of taxation and monetary and fiscal policy. So I think it changes a lot of that. I know that's a very unpopular view, but it is what it is. It's inescapable. What you need to do is maintain your privacy within that.
Bitcoin has finally corrected downwards after being on a bull rally for the better part of this week. This is an expected development for a digital asset that has grown so much in such a short time. However, while some in the market are worried about this downtrend, it is important to look at what a correction like this might mean for the digital asset. Because according to macro investor Raoul, it may do more good than harm in times like these. Hello and welcome to Money Talks. In today's video, Real Vision CEO and popular crypto bull Raoul updates about 3 scenarios for how the war between Russia and Ukraine plays out, the outlook for different asset classes including stocks and bonds, commodities and crypto, and why the role of Bitcoin is so significant in the current economic scenario. If you like the video, don't forget to give it a thumbs up, subscribe to the channel, and turn on the post notifications. Let's dive right into the video.
So, big picture, right? We're seeing every single signal you would ever need to see to say this is going to be the predominant architecture of the global financial system and the global system of value and of all digital assets and of all contractual terms, which means it's gigantic and it's only a $2 trillion asset class. And therefore, if it's the same size as any other asset class, it's going to be 200 trillion or 300 trillion. But considering all equities and all fixed income, they're all going to go on chain as well. You know, it becomes the architecture of the world, much like the internet became the architecture of the world. This is the value layer of the internet and the contractual layer of the internet. So the market is an exponential asset, and therefore you need to look at it in a log trend. It's driven by adoption effects, which is Metcalfe's law. So it's Metcalfe's law. Why it's so fast in its adoption? Because it's built on top of 2 other networks. The internet, that was built on top of the data network, which was mobile phones and cable. So 3 networks on top of each other produce faster effects every time. That's called Reed's law. So Reed's law is at play, with Metcalfe's law as the way of judging it, which is basically the number of people on the network and the number of interconnections and the value they transfer amongst each other. That is how digital assets work. When people say you can't value them, they're magic internet money, it's nothing. It's not true. It's entirely based on Metcalfe's law. It's entirely based really on the value transacted on chain in terms of dollar amounts and the number of people transacting. Those 2 explain almost all price in crypto. I never trade geopolitics generally because nobody knows, so everybody's got an opinion. And they all sound amazing because they're really doom-mongery. Almost all geopolitical opinion is they're moving these pawns around here and this is going to happen, and almost none of it happens. So I've always found geopolitical analysis pretty useless, except on a broad level of, okay, what are the generalized trends of what is happening here? Where is the world going? So no, I don't trade news headlines. I don't look at the overall flow. The big decisions for markets are, okay, how does this play out? What are the probabilities? Is there some sort of truce negotiated, which would be a dirty truce based on a set of compromises that nobody wants, but everybody has to accept. Still probably the most likely, but every day it goes on, that probability is eroding. And then it becomes, okay, Russia's taken the entire east of Ukraine, which solidifies its territories that were separatist already, because Ukraine was essentially splintering anyway, with the help of the Russians, obviously. But then what happens to Kiev, and do they overtake the country? Then how do you negotiate? Does that mean Russia's permanently out of the global economy? Where do their linkages lie? Do they now move to China as fast as possible? Is China the friendly dragon or the enemy? Are they going to use this as an ability to get Russian assets and Russian commodities on the cheap and hold the power? Probably. If you go back in the history books and see even the recent history of what's been happening between Russia and Ukraine for a long period of time, you've seen that this is coming. And the Russians have flagged it for a long time. So it happens, and it's a shocking event for everybody and a very sad event, but it wasn't unforecast. It was no black swan. We kind of knew it was coming. Like we kind of know that China is going to overtake Taiwan at some point. It's just a matter of when. So yes, the asset markets have reacted a lot to it because of the incredibly strict sanctions that are being imposed. And that in itself was a really interesting development. Outside of the machinations of war and how this plays out, what the Russians actually do, what do they want, something bigger is also happening, and it's kind of another fourth turning moment. And that is the fact that we've forced a large country to realize that US dollars are not an asset because they can be taken away in terms of usage. Okay, that's a big shock to everybody, including the Chinese, the Indians, or anybody else, the Saudis, anybody. It actually accelerates the trend of the bifurcation of the world, moving away from the US as the large hegemony and into this world where the dollar, people have to avoid the dollar over time. And we can talk about this later. It's actually probably a very dollar positive thing in the meantime. But that is one massive fourth turning shift, which is the change of the rules-based global order system. And we can see that being fought out with NATO as well, which is part of the rules-based global order construct that came out of World War II, and trying to see what NATO can do. Can NATO do anything? And if it doesn't, it again strengthens others to do what they want. We've seen that trend when Trump moved out of globalization, said we don't want to be interventionist. Well, we saw Saudi assassinate a journalist. We saw the Turks assassinating people. We saw China doing more of what they wanted and Russia being more aggressive. So once you take away the global policeman, you're going to leave yourself with chaos. And that's happened every time empires have shifted. You leave vacuums, and power vacuums create somebody else filling the power. The world has never been more indebted in its entire history as a percentage of global GDP. The US is the largest indebted nation as a percent of world GDP in all recorded history. The entire system runs on US dollars, and everybody's borrowed them. So you've got this, you've heard this dollar milkshake theory that gets floated around by Brent Johnson. It's basically also aligns with my theory that the dollar is structurally a problem now because there's too much dollar debt. And so there's always these claims on dollars that drives the dollar higher over time. And particularly in times like this, where there's uncertainty or you take a debtor out of the economy, you're kind of, it's musical chairs, you're taking some of the chairs out, and what happens is the dollar rises. So it's become increasingly difficult for the global economy to operate because its business cycle is now so tied to that of the dollar. The dollar, and I say this all the time, is the big daddy of all asset classes. It drives everything. So the world is now beholden. So if you are a South African exporter and you're exporting to China, you're actually beholden to the dollar cycle, which is out of your control. So people are starting to think, and this has been floated for a long time now, is how do we get around this? Can we use SDRs? Didn't really take off. We're starting to see central bank digital currencies. Because there's another thing that comes with that dollar hegemony and the reserve currency is they own the rails, which is the SWIFT payment system essentially. So people don't want to be threatened, and we've just seen that be accelerated just now with Russia. They don't want to be threatened with not being able to send money around the world. Why should that be the US's choice? Well, it is because that's the reserve currency status benefit that they have, the exorbitant privilege that they own. So over time, we've heard nations talk about this, that they can't deal with it, and what they want to do is move to some sort of potential basket. So,
is this current Bitcoin correction bad? For any upward recovery, there is bound to be a correction. This can either be good or bad depending on the circumstances surrounding the market movements. This time around, Bitcoin has begun a recovery trend after making significant gains earlier this week. Now, for the present market, this looks to be more of a good thing for the digital asset given where the price has landed. Bitcoin had been able to hit as high as north of $47,000 during its last rally. This had helped to cement the cryptocurrency's place in the bull trend. However, after building up so much momentum, there was bound to be a drawback, and the result of that has been a declining value. These kinds of corrections during bull rallies are always good. This is because they allow overbought indicators the chance to reset their values to become good enough once more for investors, paving the way for even more money to come into the market in the wake of the correction. So what are your thoughts about this current Bitcoin correction? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.